Hi, everyone. Welcome to Screw the Stock Market, where we talk about alternative investments outside of the stock market with the goal of taking control of our finances and our futures and our lives and attaining freedom. Today, we have a really special guest, Heather Dreeves. She's done some amazing things over the last 20 years, essentially in this space, doing what you and I want to be doing, Aziz.
Yeah,
What'd you
essentially.
think of the show?
It was good. It was good. It was really informative. I mean, she pretty much is where we want to be.
Yeah.
It's a vision into the future. I really liked it. It was informative. She focuses a lot on how to basically make use of fundraising. And, if you're not able to fundraise yourself, there are already funds created out there if you just want to be a passive investor where you can put your money and just let it continue to grow. She also discusses, how to maximize and utilize your self-directed IRA. And lots of little tidbits and nuggets of information that would be really helpful. But it was really kind of inspirational in terms of, like I said, it gives you a vision of where we could be in a few years, managing multi-million-dollar funds.
Hell
And
yeah.
that got me excited.
A few months.
Yeah, there we go. A few months from now.
Yeah, I think it was just a good show. Hope you guys get a lot from it.
Yeah.
And, I think for me, one of the big takeaways is just her last point on action, right? Like there's all this research, there's all this learning, and we're kind of guilty of it too, right? We've been doing the show now for several months and like learning and learning and learning. And then there's action
Got to
and
implement.
you got to do it, right?
Yeah. Well,
And
no,
we
we
have.
have we
We're
have
doing
been
it.
implementing.
We're
So I was
doing
about to say.
it. We're doing it.
Not every strategy. We haven't had time to do everything, but we've
Of
been
course.
doing them piecemeal as in order as much as we can.
Yeah, no, I'm excited for the things we got going on,
Yeah.
and we're in the game. We're making it happen, and so action. So listen to the show, learn some stuff, and then take some action, guys. Thank you.
All
Thanks for
right.
tuning in. Hi, everyone. Welcome to Screw the Stock Market. Heather, we're so excited to have you with us today.
Thank you for having me. I'm excited to be here.
And I'm definitely dazzled by the background there.
That's actually the view from our office.
That is
Really?
where I'd like to be right now.
Yeah.
All I have is a parking lot in front of me.
Yeah, we've currently got Mark Wahlberg in town. He's got a place here now. If you're a CrossFit follower, there's some CrossFit athletes doing summer training here. The secret's out. It used to be a very hidden secret that it was really nice here, and that's not the case anymore.
Oh, CrossFit. That's right up your alley, Alex.
Once upon a time, I've retired. I have nothing to prove anymore. But Heather, we're excited to have you. So, we looked at your background and especially I think for both of us, we're both in the act of fundraising, right, for deals. And so, the fact that you're such an experienced person who's dealt with so many different types of investors and investments, and it seems you've probably been having the conversations that we're having for a lot longer than us. And so we're really excited. It's really a great time to be talking, especially in the environment that we have right now with at least what I've been sensing as a lot of fear and hesitation from people. And so we'll get to that when we get to that. But first, would you mind sharing with us a little bit about your background and where you grew up and how you
Yeah.
got to where you are?
Yeah, I'd love to. So I grew up in Spokane, Washington, not far from where we're located. We're actually located in Coeur d'Alene, Idaho. So we're just about 15 minutes east of Spokane, our company. And my path to this is kind of interesting. I always find everybody has a different path. And, most of the time what I'm finding with people in this industry is they didn't set out to do this originally. For some reason or other, they ended up, in this industry, but it wasn't necessarily the plan. And mine is not much different. I was a college soccer player, met my husband in college, thought I wanted to be a teacher, thought, gosh, I'd love to have summers off and Christmas break, and then realized that I had to be with kids all day in a classroom, graduated with my teaching degree and never taught one day, which is super funny. But also had a knack for sales. So I was in a couple sales jobs, and then we started having kids, and we have two boys, 24 and 22. And as a family decided that I was going to stay home, that was important for us to have a full-time parent around. And so I stayed home and, coached soccer clinics here and there. And we were in the process of buying 3 indoor soccer centers. That was what my husband did, is he opened and developed these soccer centers. And I think every business owner has one story in their back pocket that the plan didn't go as they thought it would. And we ended up not buying them. And I had actually started volunteering at the school. I was staying home with our boys, and a friend of mine was in the private money industry. And he said, "What are you doing volunteering? Come to work for me." I had had a sales job with him in the past, and I didn't even know what he did. I said, "What is private money? I have a mortgage. Is that the same thing?" He's like, "No." And so long story short, I started working with him, and my eyes were open. Like, I always, I grew up in a very traditional family where if you were going to buy a house, you went to the bank and you got a loan. And if you were investing money, you went to your financial advisor and you trusted them to deploy your capital and earn the best yield you can. And so when I got in this industry and saw that, just because you wanted to buy a house, it didn't necessarily mean you had to go through the bank. There were private lenders. There were people that wanted to deploy their capital. And as long as it was a good deal and there was some meat on the bones, people were more than willing to fund your deal, providing it was a viable deal. And then I started working with investors and seeing, very high net worth individuals telling me that they didn't do anything in the stock market. They bought notes, they, put money in real estate funds and were earning double digits. And I'm going, how come nobody's educated in? I've never even heard of this. So just kind of fell into that and really got a knack for working with investors that wanted to deploy capital, because I saw what I was able to help them do for their families. And they were retiring and they were living these lives where they were traveling and they were taking these nest eggs that they had grown for years, through more traditional sources like 401ks and IRAs. And once they retired, they were living off the earnings they were making through the company I worked for, investing it. And they weren't depleting their savings accounts and their retirement accounts. You get so many people that get to retirement and they're going, okay, I've got $500,000. How long is this going to last me? It's like, you don't even have to touch that. Just deploy it in a way that you're making enough on your money, make your money work for you, and you don't have to worry about that. And then there's still some left to leave a legacy to your family. So it just was really fascinating to me. And it's opened up a lot of doors for my husband and I mean, we didn't end up buying the soccer centers, to make a very long story short, which was a blessing in disguise. We started investing in real estate. I got my securities license. I probably would not have done that had we didn't have to pivot very quickly. We have fixed and flipped houses. We own rentals. Our kids are involved with it. And so I see the path to financial freedom through these types of investments and activities, whether you're an active investor or somebody looking for something passive. And I have a passion to educate people on this, because there's not enough information out there about that. Not enough people know about it. And I think I've been doing it 20 years. So it's changed a lot. And I think a lot more people are educated about it, but I still think there's still tons of opportunity to share. And that's really what we do here. Is obviously we offer opportunities to invest, but more than anything, we're here to educate people, which is funny because I told someone on a podcast the other day, I didn't want to be a teacher. He said, "But you are a teacher." And I was like, oh my gosh, I am. So, I've kind of come full circle.
That's beautiful. I really relate with that, because my first job out of college was a teacher and it wasn't for me, right?
Yeah. I was about to say that I could see the bead of sweat just coming down your scalp the second she said teaching. That was not a fun time for you, I remember.
But I'll say that the best part of what I do now is the idea of teaching, right? Whether it's with real estate clients who are buying and selling a house, or this investment side of it, it's the part that I still get most excited about. And I remember the second time I tried teaching, and the counselor, he's meant to counsel the kids, but he came and put his arm around me. He said, "Alex, just because teaching didn't work out for you in this format, there's something about you that wants to be a teacher, and maybe it'll be in a different way." Yeah. And here we are, and so that's awesome. I totally resonate with that.
I love it.
And I love the way you describe kind of this shock at this whole world of investing and wealth building that has been here probably all along, and we just never knew it was there. I mean, I know I felt that way, Aziz, and it's almost, you talk about how much it's changed in these years that you've been doing it. but it's still not the default, right? It's still this, they're still called alternative investments when they're probably better, right?
Yeah.
I know. I mean, I've literally at one point in my career, I had a guy call me and he said, "Hey, I'm so-and-so's neighbor." I said, "Oh," it was a current client of mine. I said, "Have we met before?" He said, "No, but I checked his mail because he's on vacation and I want in on whatever he's doing because I saw his checks that he was getting from your company." He goes, "I want to know what and his neighbor wouldn't tell him what he was doing because he was afraid there wouldn't be enough deal flow for him."
Oh,
Wow.
So it's always been kind of the secret society. And I've had guys flat out tell me, "I don't want to refer anybody to you because I'm afraid there won't be enough deals for me." It's like, the reality is there's enough deals out there. Trust me, the more investors you have, the more deals you can do. But I think it's funny that that's how people look at it. It's not really that they're afraid to tell people because, maybe people won't buy in. They're afraid because there won't be enough for them to go around. It's just the funniest community. And most of the clients I deal with are referrals, "Hey, my brother does deal with you. My dad's been doing stuff with you." So
it's interesting that you say that there's like competition because I think, at least from what I've seen, the experience with, most of the people in the community has been very positive. I mean, people are very receptive to helping and either providing resources or tips or connecting you with people. So it's possibly you're dealing with a much higher caliber deal flow than we are, maybe. I don't know.
Well, I think it's evolved. I mean, this is 10 years ago and, we were doing local deals. Like, in my opinion, clients that like local deals, that's all they do. I only want to do stuff in my backyard. I don't want to invest 5 states over, so okay. I think it was probably more specific to the type of deal and the actual transaction than telling them about the opportunity. So it has changed. And I think word's out there. I mean, podcasts like this, like 10 years ago, we didn't have this and we didn't have webinars and IRA companies, educating people about it. So I think it is more spoken about, but you're right. It has sometimes a negative connotation. Oh, it's private money. Oh, it's hard money. Oh, it's an alternative investment. It's like, yeah. It's not, in my opinion, any riskier than putting your money in a stock market account. So I guess it's just the way you look at it and what you're most comfortable with. Yeah,
no, definitely. That is a fear factor. I mean, I was just talking to some folks just the other day to try to raise some capital. And, I mentioned my deal that I'm trying to currently work on. And I also mentioned Alex's deal. They don't know Alex. So they were like, "I don't know Alex. I don't trust Alex," immediately. And, I'm trying to explain, well, look at the merits of the deal. They're like, "I don't know Alex. I don't trust Alex."
People are like that. Yeah.
Yeah. So it's hard. It's hard to kind of break through this kind of stigma and like this kind of fear factor that exists.
Yeah. People invest with people they like and people that they can trust.
Right.
Yeah.
Yeah. And an introduction like that, I mean, even though this case, it was someone who you knew, who was willing to work with you.
Yeah.
But yeah, I think what you talk about, like the referrals and that kind of thing, are probably very meaningful to know, hey, they've made money, they've been successful, and now. Right. But we mentioned, I guess, fear and stuff. Maybe this would be a good time to talk a little bit about just the current environment of, as he's mentioned, we're both in different raises right now, and it's challenging, right? You have these conversations and people who maybe 2 or 3 months ago were gung-ho, hey, please send me an opportunity and I'll invest. Right. And now people think twice. People are like, oh, there's inflation, there's, recession, there's all these things being talked about. What are you hearing?
So, I mean, one of the things, and we hear that all, I mean, I literally take calls all day long, people watching the news and, the whole world's coming to an end. Quite honestly, we look at this as opportunity. We're pretty excited about it because our fund is unique. We have a diversified fund. And what I mean by that is we make money for our fund members by taking 75% of our fund balance and we lend that money out to other real estate investors. So hypothetically, Alex, you could come to us and say, hey, I found this house in, Virginia. I want to fix and flip it. We could potentially lend you money to do that. We can lend you purchase money and rehab money. So a big bulk of our profit that comes into our fund is through borrowers' interest payments and origination points. The way that we're successful is getting those borrowers to exit those loans, right? And historically, it has been selling. And I mean, we've all been spoiled, right? Like you buy a house and you're pretty much guaranteed to make money 6 months down the road because the values have increased so much.
Yeah.
And so that's one of the things I've started hearing is, well, the fund has done great and it's always performed, but what are you guys going to do? Interest rates are rising. Values are not necessarily declining, but they're flat right now. They're not increasing. And so the biggest concern I hear about, our strategy is, how are these people going to get out of these loans? Because our short term, 12 months. And so one of the things as a fund management team that we do is we're always looking at this like, hey, the market's shifting. Just because fix and flip has been profitable, that doesn't mean that's going to be the case in 6 months. We believe that there's a huge opportunity in holding these properties. What do they say in a downturn? A real estate investor turns into a landlord. And so we are starting to see that is these borrowers are coming back to us and they're saying, hey, I was going to fix and flip this, but honestly, it's more profitable to cash flow it. I'm going to just rent it. So we have funding in place now to help them exit those loans. So
essentially like a refinance to be able to.
They'll do value add, they'll rehab it, get a tenant in it, and then we have a 30-year rental product, and we'll refinance them out. So that has solved that concern. The other thing is we only play in the affordable housing market space. So what I mean by that is single family up to 4 units, residential. And we don't lend or buy properties that are more than the FHA cap. Because when you start getting up above the FHA cap, this being an agent, your database of clients that can qualify for those types of mortgages. I mean, I think I just read something recently. It's like decreases by 80% when you get over the FHA cap.
Wow.
So, and the other thing is if you're under the FHA cap, you can typically cash flow them. So that's something we look at really closely. And then the other 25% of the balance of the fund, we buy real estate assets. So in Spokane and Coeur d'Alene, Idaho, we have acquisition team members that go out and find deals for us to buy. In the past, we've been fixing and flipping those, and it's been very profitable. Right now, we're starting to hold more and cash flow them. But we're also excited about some of the foreclosure opportunities that are coming up. We go to the auction every week. COVID kind of affected that because there was a moratorium on everything. So I think a lot of people's fear is, hey, how are your borrowers going to get out of these deals? How are you guys going to sell these properties, to make money? And they're just unsure, they've seen their 401ks decline. They've seen other stock investments they've had, take a beating, crypto, take a beating. We still believe real estate, whether it's commercial or residential, is one of the best places you can be in an inflationary time. It's just, I think that the exit strategy and the strategy in general is a longer term strategy. It's not such a short play like it was even 6 months ago. So, people are just uneasy. They don't know what they don't know. And, I think there's a lot of misinformation out there, but if you actually look at it, there's still tons of opportunity. Our fund has been paying 10%. It hasn't skipped a beat. Our defaults are not anything to even think about. We haven't seen it incline in defaults. I think that might change in 6 months, but we're going to look at, hey, keep these people cash flowing, keep them having some payments coming in instead of, you're having a hard time, you don't have to pay us for 6 months. That's not the case. If they can't manage the property or the project, we'll just take it back. And so what we've done is just build a massive team here. We have 100 employees. We have a servicing department, a foreclosure department, an underwriting department, an origination team. But again, people are uneasy. I don't think it's the right time to pull out of these types of investments. I think it's important to keep your money working for you. But like I tell my clients, I don't want you to lose sleep at night either. I want you to feel comfortable. And I think that goes back to, Aziz, what you said about, well, I don't want to do that deal. I don't know him. People invest money and stay with people because they trust them and they know that you're going to be there through the good and the hard times. And that's a culture that we've built here and a team. And I would say that our team is the biggest reason people invest money with us, not necessarily the asset. It's really the team here. And they want to know that you're going to be through it, all this.
And especially when you're bringing in 10% returns. I mean, that's destroying the market right now in the current environment.
Yeah.
That alone should be a big selling point for anybody.
Yeah. And we actually have 2 funds. They're managed the same, but for a long time to have a real estate fund, you had to only let accredited investors into them. So they either had to qualify through high income, $200,000 a year as an individual or 300 as a married couple, or they had to have $1 million in assets. We actually have what's called a Regulation A plus fund, and anybody can invest in that. And they can invest with as little as $1,000. That is unheard of out there. There are not real estate funds typically out there that anybody can invest in. So I think that's something else that, has set us aside. So your small dollar, like your guy that just put $6,000 in his IRA or, rolled over a 401k, they can invest those kind of monies in it. So we focus a lot of our marketing on, hey, get your IRA working for you, especially Roth.
Yeah.
Like, God forbid, if somebody doesn't have a Roth IRA and they have the ability to open one, they have to go open one right now. So we do a lot of educating on that type of stuff too.
Now, I want to ask you about that a little bit more, because I mentioned, like, for me, right, when I'm a realtor and I sell a house and I might make a $10,000 commission, and it's frustrating because, that's a big part of this show, right? For me, is I have this thing, but I can't go out and buy a house with $10,000, and I can't go out and buy an apartment building with $10,000 or invest in a syndication for $10,000. Now you're saying there's something here for me. So yep. I'm going to close this little shade and I'll be right back.
And actually, how do you even set that up? I'm very curious about that.
The fund?
Yes.
So you have to, it's a pretty long process. It took us a year. You go through all this due diligence with the Securities and Exchange. You have to have an attorney draw up all the paperwork. So you have a offering circular or operating agreement. And then once you're approved, there's a lot of things and hoops you have to jump through also. You have to have an online platform where people can go invest. There's a lot of reporting. A Regulation A plus fund is highly regulated. We do quarterly reporting to the SEC, and we always obviously have to be in compliance. But it's called a Regulation A plus fund is what it's called. And you can set your minimum at whatever you want. But I've been here 10 years, and we always thought we were doing a disservice for exactly what Alex said. We'd get people that called, I really want to invest. I want to create wealth for myself, but I've got $5,000. It was like, I have nowhere to put that. I can't put you in this fund because you're not accredited. And we sell notes or paper, but those are typically around $50,000. So, we felt like, honestly, why should the wealthy get wealthier and, other people shouldn't have the same opportunity? So when they changed a lot of those laws through the Jobs Act, we jumped all over it. And that's when we opened our fund. It's been open about 3 years.
Oh, okay. And is it really similar to how some of these larger fund companies do, like Fundrise, for example, or is it different from that?
No, it's very similar to it's crowdfunding.
Okay, so yeah, definitely. Yep. Okay.
Yeah, and that fund's been hitting about 8.5% to 9%. It's a little bit less, only because it just doesn't have as much money raised in it yet. And but it does. It is managed exactly the same as our other fund. The same assets go in it. It makes money the same way. It's just the minimum investment is smaller. And are you guys familiar with what a preferred rate is, or a pref? So the pref on the unaccredited investor fund is 6%. So that means our investors get paid first, and then we split profit above and beyond 6%. So it's been yielding 8.5% to 9%, which is still really good yields, especially for small dollars. I get people call all the time, and they're like, I left a job 5 jobs ago, and I think I left my 401k there. I don't even know what it's doing. What can I do with that? It's like, wow, you need to move that. You can roll it over to a self-directed custodian. So you're not taking it. You're not going to get taxed on it. But now you can invest it the way that you want to, instead of leaving it at an ex-employer, 5 jobs ago. So that's where we capture a lot of clients and help a lot of our clients, is get that money to work, or set up, do your minimum or your maximum contribution into your IRA, or college savings accounts, health savings accounts. You can set all those kinds of accounts up with self-directed custodians. And those are the perfect kind of accounts to invest in that, because usually they're small dollars, right? And you really don't have a home for them.
Yeah. This would be great for someone like my parents, who they have a very, very small Roth, just because, again, they had no financial, education or training as immigrants coming into this country. So it wasn't something they prioritized. It was just kind of surviving. Yeah. So later on in life, I actually created one for them.
Okay.
a little bit of money in there. So this would be something that could be actually beneficial. I mean, it's not enough for them to do anything major, but it can go into one of these types. Exactly.
Yeah.
So
So
this is a great opportunity for those types of situations.
a lot of our employees have set up accounts like that. And, I wish I would have had this opportunity for my kids' college savings accounts back then. I mean, imagine what they would have made on their savings at 9 to 10%. So there's huge opportunity. And a lot of those IRA custodians, do you guys work with any of those at all?
Not currently.
We've had one guy on the show, Daniel Blue, who I think his focus is more like solo 401ks, which is subtly different.
Right.
Yeah.
It's not exactly the same.
But those kind of accounts can be set up with a self-directed custodian because your custodian is going to keep you within the guardrails. So you're not going to get tax implications, right? That's what they're there for. But there's really good companies out there like Quest IRA. We do a lot of business with them, Equity Trust, and they do a ton of free education on their websites. They're not financial advisors, neither are we, but they're very clear about, we're educating you. These are the things you can do. This is what you can't do. And they're amazing at helping clients move accounts over or even just set up new accounts and help them get them funded. So I'd be happy to give you guys some referrals for that.
Awesome. And just so that our listeners know, what are the potential tax implications for moving an IRA into one of these types of funds?
Well, there aren't any because you're rolling them, right? So they're not sending you your money and then you're sending it off. They literally so let's say you have a IRA set up with Fidelity and you want to move that. And the challenge you have with your traditional custodians is they're only going to let you invest in what they suggest. And most of the time, what they suggest is how they get paid, which I understand, right? Mm-hmm. We're all here to make a living. But they're not going to encourage or allow you to invest in any kind of an alternative investment. So you could potentially roll that Fidelity account over to Quest IRA. So it never comes into your bank account. It doesn't touch your hands. You roll it over there and now you're self-directing it. You're calling up Quest saying, hey, I want to invest $5,000 in Heather's fund. And then we coordinate it. They send us the money. So you never touch it. There's never tax implications. But if you pulled that money out of Fidelity, you're going to get taxed on it as a distribution if you're not at the age that you can, 59 and a half. So that's the beautiful thing about rolling them and keeping them tax deferred.
Right.
And if you have a traditional IRA, you should look at converting that to a Roth.
Right. I do that regularly.
Yeah. Smart.
I tend to use the backdoor Roth approach.
Good for you. Yeah. So that's the benefit to it. So a lot of people just don't know. So they just leave their accounts where they are and they're getting nickeled and dimed to death by their money manager because they just don't really know that there's any other option out there, or they left their 401k and just kind of forgot about it. Those are where I think we probably provide the most benefit, is just kind of directing them. Hey, here, call Quest or call Equity Trust. There's a lot of them out there.
Right. And it's great too, because in terms of the Roth IRA, I know like for my parents right now, they're both in their 70s. So they're over the, the distribution age. So they can collect all those earnings tax-free. And, the same if they were, invested in these types of funds as well through the self-directed IRA. So it's just money in the bank.
Well, plus if you inherit that Roth IRA, you don't pay taxes on it either.
Correct. Yeah.
Yeah. So that was actually something I just learned in the last 6 months. I didn't realize when you inherit a Roth, it's also tax deferred for you.
Right.
So they're pretty powerful.
Yeah.
Yeah.
Well, Heather, can you share a little bit more about how our audience might be able to reach you and interact with you? Yeah.
So we've got a pretty sophisticated website. You can go to Secured Investment Corp, no plural, Secured Investment Corp. And when you get there, you're going to find some information about both of our funds. So Fund 3 is the unaccredited investor fund. Fund 2 is for accredited investors only. And then we actually also have our mortgage notes on there. So all of these notes that we originate on our funds, we also sell. And so I would say that, depending upon a lender's appetite and actually what they're trying to accomplish. So that's one of the things with my clients I try to figure out is, what are you trying to accomplish? Are you growth minded, like Aziz, and you're just trying to grow these accounts as fast and big as you can, tax deferred? Or are you someone that maybe be like your parents where they're trying to create cash flow. And, so determining that first typically will identify which investment option, is probably going to best suit them. I would tell you that our notes are probably our more aggressive, risk adverse clients. They're wanting to buy notes that are no more than 70% loan to value because they see the potential 30% equity play in it, right? They're saying, I don't mind if this guy doesn't ever pay. I'll take that property back all day long. I got 30% equity there. I'm comfortable. I'm sophisticated. I'm an agent, whatever the case may be. Where on the other side of it, the funds are a nice option for our clients that, are a little more less risk adverse and they don't want to deal with some of the headaches. And so the funds are nice because they're the same asset. The notes we sell are the notes in the fund, but we manage it for them. And then, what I would say about the funds is they're diversified. You could take 50 grand and buy one note and your guy quits paying and you got a foreclosure, you don't have cash flow, where you could take potentially that 50,000, put it in the fund, and now it's diversified over hundreds of notes. So, what they'll find on the website at Secured Investment Corp is our notes and then our funds, information about our funds. But the really neat thing too is they can schedule an appointment with me. So I take appointments all day long with my team, and we'll schedule a 15-minute consultation. They can look on our calendar and schedule. And I mentioned this earlier. We're here to educate, and if through the education process they decide that this is a good fit, we help them with the process. They don't have to do a lot of heavy lifting. Also, if people are interested in getting more information about how to move IRA accounts over or set them up, we'll refer them to some other companies. We're not a custodian, just for clarification, but we've probably worked with every custodian out there, and we can just kind of help them navigate. I think that's where we're pretty useful for clients. But always go to our website, securedinvestmentcorp.com, schedule an appointment. There is absolutely no obligation to do that. We really just want to share more information about alternative investing. And if through that process, they discover that it's a good fit, then we can always talk about, the next step of that. Very
exciting. Well, Heather, is there any last words of encouragement or motivation or wisdom that you'd love to share with our audience?
What I come to find is a lot of people just don't take action, and I'm no different. I've done the same thing where I've got all the information and it's scary, but you can't start creating wealth if you don't start taking action. And you don't have to have large dollars to start investing. Just start somewhere. Even if it's with $1,000, at least you took action and you're starting and you're moving in that direction. If you don't ever take action and you don't change the path, what you're doing, it's not going to change. If you're tired of not earning yields on your money and getting your money deployed, but you don't ever deploy it, it's not ever going to change. So I would say taking action and educate yourself, know who you're working with as an operator. There's lots of them out there, and there's some that are better than others. Just, know and trust and like who you're working with, and things typically work out. But, becoming educated about what you're investing in is very important, and know who you're investing with.
Very exciting. Well,
yeah, definitely.
Thank you so much. Really. It's been a real pleasure having you on the show. Yeah.
Likewise.
Learned a lot.
Yeah, this is just a great fit. It's really nice when there's someone who's one question I forgot to ask. I had it written down here.
Oh.
I always want to invite our guests to hate the stock market. If there's any shade you'd like to throw their way about how it's corrupt or it's rigged or anything, you don't have to play this game if you don't want to. If you don't feel that way, honestly, deep down,
it's cathartic for Alex.
But it's always fun.
You know what? I do feel that way. I feel like you don't have control over what you're investing in the stock market. I think it's very manipulated. I don't have, facts to back that up, but that's the way I feel. But I also feel like you should invest in what you're most comfortable with, and real estate is what I understand and know. I have a person on my team who's 22 and he's obsessed with crypto. And I'm like, I don't get it. I just cannot wrap my head around it. He's like, but you can make all this money. I go, but I'm not going to invest in something I don't understand. And I don't feel like I have any control over that whole situation. So I'll stick with real estate. So that's my plug on the stock market. My parents weren't big stock market people. They created wealth through real estate. And, I grew up seeing that and seeing the opportunities that it did offer for my family. And, I continue to stay the path and don't have FOMO, fear of missing out. Everybody's like, what am I missing out on? Should I put money in crypto? Should I put it in the stock market? I just, I think there's people out there that are very qualified to invest in it and do very well, but it's just not my cup of tea.
They should fear missing out on this episode.
Yeah, don't miss out.
Yes.
Heather, thank you so much. We really appreciate your time.
Yeah,
okay?
it's been a pleasure. Thank you.
Thank you.